Welcome back to the Sovereign Ratio. In a video I did last week, I discussed the 618 and 65 golden pocket break potentially, and what the implications of that would mean on the 4-year cycle. Obviously, you all loved the video because it's one of the highest viewed and most liked videos that I've put out since last April, so I really appreciate everybody coming by and all the new subscribers that are here because of that video. In this video, we're going to do a follow-up to that, look at the market today as we have blown past and invalidated the previous 4-year cycle theory that I had regarding the 618, 65 golden rejection. We're going to look at the market a little bit, go through some altcoins, some aggregate information as far as ETH Bitcoin, some total charts and all of that to kind of see what could possibly happen going forward. If you're new here, please hit the subscribe button, the like button, leave me a comment below, and follow me on Twitter for more updates. So before we go any further, I actually need a little bit of input from all of you. What I would like all of you to do is please leave me a comment below and let me know what you think about my current video posting schedule. I'm of a mindset that I like to give you information whenever it's necessary and fresh. I don't like to regurgitate the same information day after day like some people do on YouTube, just basically saying the same thing in a different way so I have another video on the next day. But if you all would prefer that I post daily videos, I can try to make daily videos for you all. I just want to make sure that the content is fresh and it's not regurgitating every single day. So please let me know what you want in the comments below and I'll see what I can do. Also maybe drop some topics that you'd like to see. Right now I took a recent poll that says it looks like Bitcoin and market updates and also altcoin rundowns are what's desired. So let me know in the comments and we'll see what we can do, see how fast we can grow this channel together. But moving on to Bitcoin, what's really important here? If we look at the chart, in my last big Bitcoin video, I said that if Bitcoin closed 3 daily candles above 50,268, which is the 6.5 golden extension, then the 4-year cycle that we've known is somewhat invalidated, not completely, just changed. So the real question is the cycle broken? I don't think the cycle's broken. There's a potential that it could be broken. I think this is just more intense. I think that's the word we need to go with for this, is the cycle is more intense. I don't think the fundamental rules of buying RSI levels that are low and selling RSI levels that are high are far-fetched. I think those basic rules still apply to TA. I just think that this is a more intense rally that we've had this time. If you look at the monthly chart, let's actually just pull the monthly chart up and put indicators on. I just noticed this a couple days ago after I made that video. Look at the RSI. The RSI on the monthly chart is 90. That is like screaming exit. That's screaming get out of your position. Now, I'm not going to tell anybody to get out of your position. I'm not telling you to sell your coins. What I'm saying is if you like to play the market and maximize on swing trades or long-term trades, now is definitely a time that at least consider the idea. I'm not saying sell your coins. I don't want everybody in the comments saying, don't play this game, don't listen to this guy, that kind of thing. There was one person that said that on that last video. Everybody else liked the video, but there's always got to be one, right? There's got to be one person to talk shit. But anyway, at a monthly RSI of 90, I just can't in my right conscience tell anybody to buy. And in my last video, I made mention that it looked like an area where certainly this is extremely overbought and it didn't feel safe to buy. Well, look what happened. Let's go to the daily chart. You can see that Bitcoin has now rejected twice off of that $53,000 level, which actually lines up very well. If we switch over to the weekly, get rid of these indicators, that 53 lines up very well with this point back here whenever the bear market began. We get a trend line and draw it right here. You can see that the candle's closed below this wick back here in December of 2021. Now, I'm not saying that Bitcoin is going to have this insane correction. I'm not saying it's going to go to 30K. Could it go to 30K? Sure. I think that 27 to 28K is the absolute worst case scenario. But if I was to give you probabilities on what's going to happen, I would say there's probably going to be a low to mid 40s retrace and then onwards and upwards. But we don't need to close our minds out of the possibility that things could go downhill. Nobody knows what's going to happen. So being a perma bull is ineffective. Being a perma bear is ineffective. Right now, I'm rotating my stance to a more bullish one, but I'm also anticipating a pullback. I'm not just going to say, okay, I'm bullish now, I'm going to put all my money in. No, the RSI on the monthly is 90. You don't buy that. Like that is not an area where you buy coins. Could it go up more? Could you make a shit ton of money while the RSI is 90? Yes, there's a probability for everything, right? But Logic and common sense would say a monthly RSI of 90 is not something that you want to buy. A monthly RSI of 20 is something that you want to buy. So what's going to happen next? I don't know. You don't know. Nobody really knows, except maybe a couple people on the planet that control the majority of Bitcoin and crypto. But what I can tell you is that a pullback looks like it's beginning. It's very, very healthy. It's long overdue in my opinion, and this is nothing to be concerned about. In fact, I would be looking for dips in a couple of key areas that we're going to look at now. All right, so I switched Bitcoin charts just so I had a little bit cleaner screen to work with here. All I've done here is I ran a Fibonacci retracement from the low back in the bear market in November of 2022, all the way to this current assumed pre-market rally top. Maybe it is, maybe it isn't the top. I don't know. Right now, I'm just assuming that it is because I don't have any other data to go on. Now, if this is, I did a Fibonacci retracement and the 236 sits here at 44K. I think that would be a very healthy pullback. And you see there is quite a bit of activity in that general range, anywhere from 44K to 40K, really. The Fibonacci range is what I go off of, but there is a lot of activity in that area that even extends back here. You can see there's a lot of candles. There's a lot of volume that changed hands in these areas. So 44, you've got another one here. The 382 sits at 38.5, which is actually right where that previous wick came down on that last 21% correction. And then the 0.5 retracement is here at 34K. Again, I'm not seeing 30s in my target right now. Is it possible? Yes. Now, another way to look at this is what we've done in previous videos. I'm going to kind of move this over to the left here and do the Fibonacci extension that we've been doing in our analysis. Again, before we were looking at that golden pocket to break here at 50.3 and 48.6. We were looking for the rejection there. Now that we've had the close above that, I do think that something has at least changed. I'm not sure that the cycle is invalidated. I would not say that the cycle is invalidated. I would just say that there's something more intense happening here. Now, in previous cycles, again, it's almost always come back down to the 236 retracement. Whenever that golden rejection happens, price pulls back to the 236, which sits at $28,171. Now, I don't anticipate that because effectively something has changed. So I'm ruling that out, but I'm just letting you all know, worst case scenario, 28K, chances of that are very low. Next worst scenario, 36K, chances of that are pretty low. Next worst scenario, 42.3. I would say there's a good likelihood of that. That would be extremely healthy. And if we do the drawdown percentage from where we are, this local top down to 43 or 42.3, that's a 20% correction, which is just the same as every other correction that we've seen in this entire last year, which again, I'm of a mind that I need to see a 25 or 30% correction to actually feel healthy about where this is going right now. Everybody's very bullish. That's great. People are making money. That's great. But what goes up must come down. Again, I'm not saying Bitcoin's going to get into a bear market. I'm just saying it needs a correction. That's all. 20% correction down here to that 42.3. If it were to go down to the 382, you're at 39K or 38.6K. That's a 27% drawdown. And then down here to 34K, that's a 35% drawdown. Now, if you go back in Bitcoin's history, a 35% drawdown has happened many, many times. It's not uncommon. So please have an open mind and don't rule these things out. Even if you get on X and Twitter and there's people telling you to buy, this is crazy. You have to understand these people are probably not doing what they're telling you to do. And you have to understand psychology. The one thing that everyone wants to hear is that Bitcoin's going to the moon. I want to hear that. You want to hear that. Everybody wants to hear that. The more these people perpetually tell you that information, the more engaged you're going to be with them, the more you're going to like their posts, the more you're going to follow them, the more money they're going to make on Twitter ads, the more likelihood they're going to make a YouTube channel where they say the same thing and you do the exact same thing. You follow, subscribe, and everything. Now they're racking up all these followers. Just take a step back, look at the market for what it is, and know that what goes up must eventually come down to some degree. Now, I would tell you, with all that information, I do think that the biggest risk right now is not being in the market. And with that, I actually started to DCA a little bit this week already, even though I think, and I'm almost positive, that altcoins are going to go down significantly on the next pullback. I still started to DCA a little bit because the risk right now, based off of the bullishness, is not being in the market. If we look at the total 3 chart right here, you can see that it is far overextended beyond what I thought was going to be resistance. What I thought was going to happen pre-halving was that total 3 would break out of this descending triangle, come up to this line of resistance right here, and then curve back down to retest this right before the halving, and then we actually start to take off. As you can see, Again, the word is intensity. This has become much more intense and blew straight past this. So now what I'm looking for, rather than a retest of this line, is a retest of this line right here, which formerly I thought would be support. Currently, from where we are now, that's only a 10% drop. That's not a very big drop at all. If we did have a major altcoin correction for whatever reason, again, I think the place to test first would be right here, where this previous resistance and support was. That's a 22% drawdown, and then back to retest that trend line, which I don't think is going to happen at this point. That's a 33% drawdown in altcoins. Now, again, I think altcoins need to correct, but as they do, I have slowly in the last few days been DCAing a couple, and I'm going to show you what I've been doing. So when an altcoin has a major move up, it's very unlikely that it's not going to have somewhere in the neighborhood of a 20% pullback at some point before it continues back up. So here's a great example of this. The graph is one of my tokens that I believe in, especially in the AI space for the next cycle. And it had a run up to 27.5 cents in the last week or so. Now, when that thing pulled back 20%, which I think was around 24 cents, well, it wasn't quite 20%, but it came down here to like this 23, 24 cent area, about 16% correction. I bought some, not a lot, just a little bit to nibble on, because I know, well, I don't really know anything, to be honest, but what I think is going to happen is that the graph is going to continue to pull back. Especially right now, it's kind of hard to see, but on the left-hand side, you can see that Bitcoin has rejected both off of this 53K line that I've got here on the left-hand side of the screen, and also this previous diagonal support. It's broken below that, it's rejected off of it, and the next thing to break through is this 50.6 level. We'll see what happens. I don't really know, but if Bitcoin starts making a move down and the market gets scared, the altcoins are going to aggressively sell off, as they always do. It's nothing new. It's just what happens, and it's totally healthy. But I did pick up a little graph. Another one that I picked up a little bit of that had a decent pullback was Prime. I didn't buy a lot. I just bought a little bit of it, but you can see that it was up here to $15.65. I bought just a very little bit, right around 12 bucks, kind of where it sits now. I think I bought it right here on this wick, actually, on this candle right here. Just a little bit, just to say I have some, because I did take profits on the way up on this rally. Another one I picked up was Kujira. If we go out on the weekly chart on Kujira, zoom out a little bit, you can see that it has really been struggling to have any big moves in the last actually couple of months now. There's a diagonal trend line right here. And when I started to see it down here, I think I picked a little bit of it up around $3.10. And you can see it did have a nice little run up here, but it's starting to correct once again. It's almost like, actually, we need to adjust this trend line just a little bit. Yeah, that's kind of more like it. It popped up above that trend line and is now headed back down again, which is totally fine. Again, something like Kujira, if you're not familiar with Kujira, it's on the Cosmos ecosystem. Staking Kujira is a little rough because the APY is not good, but it might be worth staking anyway in case there's some rewards given for people who stake Kujira. If we do a Fibonacci retracement, you can see there's an area of interest here at the golden pocket around $2.50. So I think in a pullback scenario, there's nothing wrong with that. That would be very healthy. And it actually lines up with this previous wick down from this point in time very, very well. So a $2.50 Kujira to me would be a buy all day. But I did pick up a little bit of that around $3.10. Another thing I want to point out is this continued indecision with the ETHBTC chart. You can see it kind of peeked its head up there to trap people out, came back down, peeked its head up out of this line again. Looks like it's trying to trap people out again. Ultimately, Benjamin Cowan noted this on his video recently. We can actually see a little bit of a pattern here. If you look at that, there's a down move, and then a second down move, and then a fake out before the final actual move down. Here we have a down move, a fake out. Could this go back down? Absolutely it could, because my target for this has been 0.04 for quite a while. And I think that's totally healthy, especially with the correction that I believe we need to have. I'm not saying it's bearish, I'm just saying we need a correction. Last thing I want to note is back in early 2023, I made a video called 2015 Again, Is the Cycle Repeating? Because at the time, when I was looking at the current action, this was almost a year ago now, I started to notice similarities between this 2015, 2016 bear market to what I was seeing. And I said, it looks very similar to that. And I want to note that in July 2016, at the Bitcoin halving, price rallied up to 3 weeks before the halving. And I mean, we're getting there now. We're 50 days away from the halving, and price has basically done this again. So you could see a correction after the halving. Just because the halving is a very, very bullish thing for the entire space doesn't mean there can't be a correction after the halving. It's happened here, and it was, I think, around 41%. So just keep that in mind. give it, you know, a few weeks, see what happens. If you're already in coins, you're good to go. If you're already fully allocated, you don't need to worry about things. You don't need to try to swing trade. You don't need to sell things off. Unless you're a swing trader or just not in the market right now, there's really no reason to sell your coins and try to do that. But what I'm saying is, for a lot of people who don't have the optimal entries they were looking for, I do think a correction's coming. I'm not positive of that, but it's likely, and it could happen after the halving. And the last thing I want to note is just based off an indicator. Looking at the RSI, the bearish zone for Bitcoin on the 4-hour chart is 40.2 on the RSI. On the last 4-hour candle that we just had, we closed at 40.6, so just shy of 40.2. So for me, Bitcoin could bounce from here. But what I'm saying is if Bitcoin does correct down a little bit from here, that opens up the entire Bitcoin chart into the bearish RSI zone, which is typically obviously down movement when I say bearish. What that leads to is if that bearishness continues, then that could push Bitcoin down into the bearish RSI zone on the daily chart, which sits at 40.03. Now, currently, the RSI on the daily chart is 73.5. So if it were to make a move down into that bearish zone, it needs to make a significant move to do so. You know, just on the daily chart here, looking at this structure, this is not good structure for continued upside. So is the 4-year cycle broken? No, I don't think so. I think this is just more intense. I think institutional adoption has pushed this thing up way higher. There's more momentum behind it, and that could bring more volatility. As this thing has pushed up this much, it could also correct this much. There's also the possibility that it doesn't correct much at all, and the corrections are much more shallow, like in the 10 to 20% range, in which case these little 10 and 20% corrections should probably be DCA'd. I'm of a mind that there's going to be one more bigger correction. I don't necessarily think it's going to go to the 30s like I did before based off what I'm seeing now, but I do think one's in store. I don't know, we'll see what happens. But one thing right now, if you're not in the market or you have more entries that you want to get into the market, now is the time to plan. Now is the time to find entry levels that I would say are more on the shallow end of things on your altcoins. Maybe instead of looking for a 30 or 40% drop, you DCA a little bit at a 20% drop. Or again, as I stated in the previous video, the absolute best way is to wait for a stock RSI reset on every altcoin, crossing back up 20, goes all the way down to 0, and then crosses back up 20. Because in that bearish zone, price can continue down. Even if the stock RSI is 0, price can continue to move down while it just grinds against 0. But then once it crosses up 20 and starts to head back up, that's a good DCA point. So maybe you consider doing that. That's probably what I'm going to do. But for the meantime, I think we need to wait for Bitcoin to make a decision, and it looks right now like it wants to correct. We'll see what happens. If you're new here, please hit the subscribe button, the like button, leave me a comment below, follow me on Twitter. We'll see you in the next video. Safe trading.